Alright guys, hope everyone is doing well. So let's break this long on kill zone short position on EURUSD that we took today, expecting for a continuation higher to happen, actually price pushing towards the previous day's highs right here with the lower time frame bullish order flow and everything. But we clearly identify that for a sell side of the curve to happen and for price to switch into the buy side of the curve of a lower time frame market maker buy model towards our main draw on liquidity for today, which again was the previous day's highs, we will need to see some sell side of the curve, some bearish delivery to take place, which we knew right away that should be short-lived because again, they are pushing away from the main draw on liquidity, again, previous day's highs, and we are pushing against the lower time frame bullish delivery. So this is why they identified the main area, the main target, and as we were not sitting right on the lower time frame bullish Peter raise yet, and we had a small gap, a small space for price to still trade towards before it turns around, this is what we took advantage of and squeezed in this nice and good short position. So now's that, focusing on the daily time frame. I think you guys remember that overall we are pushing towards a bigger drawn liquidity right here, which is on the downside. This monthly fake low, lots of sell side liquidity right here, and the monthly fair value gaps high being our main draws on liquidity right here on the way lower. Notice how many targets we tagged already. We had this deeper pullback right here. And after that, we switched into another sharp bearish movement right here. Very similar to what we saw right here. Measuring from this top to this bottom before this deeper pullback on the higher time frame has happened. This is what we saw. We saw a 450 pips drop right here. So if we would take this from this high right here and add it right here, notice what happened. Price dropped almost the exact same amount. It wasn't a 452 pips, it was around 440 pips right here. And now we are seeing another pullback right here. So this is not really unexpected or anything, especially as we ran quite a lot of sell side liquidity on the way already right here. So likely we are seeing now a deeper pullback taking place before we see a bigger sell model take place right here towards the main drawn liquidity and the monthly fair value gaps high right here. So that is that right here. On Friday, notice that price ran into the bearish fair value gap, gave a reaction, and on Monday it ended up running all the way, taking out Friday's high. So this institutional order flow drill type of situation right here on the daily time frame didn't play out, even though it came very close from the main drawn liquidity right here, as it was Friday's high right here, closing for the weekend, and Monday, of course. These are not our typical days to expect a momentum play to happen. So obviously, we pretty much knew that we should see more messing around before it moves our price, giving even a deeper pullback. That we talked about again, as we just saw a 440 pip move to the downside, running quite a lot of sell-side liquidity already. So that's that. Focusing on today, there's really not much to talk about regarding the daily time frame because all the action took place on the lower time frames and execution time frames. The only thing that you need to know right here was the fact that inside of this move higher right here, we were on the lower time frame, clear bullish order flow. Price started pulling back. So basically, as you're expecting for a deeper bullish pullback here on the daily time frame to happen, previous day's buy-side liquidity was on the scope today for us. So we simply expected for price to give a pullback and continue moving higher, giving us a small buy model fractal right here. So what strictly comes to today's daily candle, what we expected was for price to give a bearish pullback into bullish expansion. Main draw liquidity, the main level being the previous day's buy-side liquidity right here. Now, focusing on the lower time frames here, we are on the flower. Notice that what we had again was this bullish or the flow right here, pushing towards buy-side liquidity levels. But if talking about more details, we are pushing right back into this city candle right here. So after this extension on Monday, taking out Friday's buy-side liquidity, notice that price switched into this consolidation. It built quite a lot of liquidity around right here. And then right after the near limit open, it started pulling back. So from this point, obviously, we wanted to identify the clearest areas that price will most likely move into before moving towards our main draw liquidity for today, which was again the previous day's highs right here. So again, after the near limit open, first thing we notice that we have S&Q divergence on the downside right here. Price already ran buy-side liquidity into this 1 hour imbalance, SIBI candle, sell-side imbalance, buy-side inefficiency. So I think you guys already know that when we stack confidence on our side, when price runs a liquidity pool, interposing P array, very often what we get is a reaction lower. So sometimes we can trade that reaction if we have a very clear zone that we are trading towards. So in other words, sometimes price needs to trade lower in order to be able to run higher again with the main trend towards the main bigger drawn liquidity. So this is exactly what took place today right here as well. We identified our area the price needs to run into before it starts pushing higher. Obviously, you can see that the bulk of the volume stayed inside of this 1 hour imbalance, inside of this 1 hour fair value gap. Notice that this is where the bodies of the candles close right here on the 1 hour time frame. But what it did, it spiked even more sell side liquidity. Notice that it completely took out this sell side liquidity right here, left a massive SMT divergence with the DXI, and now it's running higher towards our main drawn liquidity, which is again the previous day's buy side liquidity right here. So this whole drop lower was bigger than we initially anticipated, but overall price nicely ran into our targets, nicely ran into our area that we wanted to see get reached before price starts building to the upside again. And sometimes we do have this area and sometimes we don't, and this is what determines if we are going to trade this move or not. All right, so now we are on the 16-minute time frame. So what we are looking for after price gave this consolidation right here during that dead window, that PM hours right here, and during the Asia range, right after the near midnight open, seeing the SMT and stuff like that, identifying the clear area that price will likely trade into before giving a buy side of the curve of a potential market maker buy model that we were looking for. This is when we started focusing on this click potential drop, and obviously it was a higher risk one because again, main direction that we wanted to trade towards today was this main draw liquidity, the previous day's buy side liquidity, trading with the main direction, lower time frame or the flow. But again, price doesn't move in straight lines, and sometimes Plenty can identify a very clear area that price will need to reach into before trading with the main direction. This is when sometimes again, then we can squeeze those quick positions, capitalizing on those moves towards those main areas. And today, the main area, right after the near the map open, when we expect for a London protraction to take place, what we obviously do is look left and do we have clear sell-side liquidity. The first area that literally caught my attention was this consolidation right here. And these type of consolidations mostly are important when they form right above PD raise. And in this case, what we had right here in the middle, if we would go to the 4-hour time frame, right here we had a 4-hour bullish for the block, and right here this green rectangle was our 1-hour bullish fair value gap. So we didn't only have these very neat equal lows, low resistance sell side liquidity right here, this whole round formation. Right below we had lower time frame bullish PD raise. So right away, when we are expecting for a market maker buy model to take place towards our main draw liquidity right here, you guys know that we split it into two halves, sell side of the curve and buy side of the curve. And sometimes, obviously, again, it is higher risk, but sometimes there are opportunities born on the sell side of the curve, trading towards that main area that price most likely reach into before starting the buy side of the curve, where the main opportunities for that day will be born. And right now you can see that price is building this buy side of the curve right here. After giving this sharp run, running more sell side liquidity, this still being the original consolidation right here. Noted that price gave the sell side of the curve and now is building buy side of the curve. So to sum everything up, imagine if this midnight open right here would have happened somewhere around this point, and let's say price would have stopped right here. This would be the midnight opening price. Price already ran sell side liquidity, already ran into bullish lower time frame PD raise. We simply don't have any space for price to trade lower. The whole sell side of the curve would have happened during EM hours and Asia range, which is obviously not perfect, not ideal. But what comes to the sell side of the curve, we wouldn't be able to catch any positions because in this case, the near midnight open happened here, and we still had a very nice amount of space right here to drop clear sell side liquidity to target clear bullish lower time frame PD raise to look for a price to trade into before it switches into the buy side of the curve. So if that would have happened right here, obviously in that case we would have been simply looking for price to give a simple protraction and switch into buy side of the curve, looking only for the bullish opportunities towards the main draw liquidity right here. In this case, we got an opportunity to play both sides. Now what comes to the execution timeframes? And focus being on the 5-minute right here. Again, sell side liquidity is this area right here. These equal lows that we just talked about on the 15-minute time frame. So the first things to pay attention to is, of course, the SMT that we had. Right here, during the pre-hours and Asia range, not something that we can fully trust, obviously, but still something to keep in mind. Notice that right after the New York midnight open, price ran the Asia range lows, but what it did, it left sell-side liquidity below it because it was just a simple consolidation. After that, notice that it started running all this buy-side liquidity that it built. So some short-term buy-side liquidity levels right here, it ran right into this bearish fair value gap here and these two upside candles right here, which was just a bearish order block. Again, obviously not something that we want to fully trust. And this is why, of course, we are not even taking any positions right here because it happened before London kill zone, the hour and the area there. Usually all the travel happened, structure that we can't fully trust and stuff like that. So obviously we stayed on the sidelines completely right here. Then after that, notice that price gave a very sharp run to the downside, leaving a 15-minute bearish fair value gap right here that we copy pasted and added here on the execution timeframes. One thing that I want you to pay attention to is this DPR lightly aligning inside of this area as well. If we would extend that, notice the bulk of the volume stayed right below it, and notice how precise it was right here. The bodies of the candles rushed right into it, respected it fully, and then dived, and then very aggressively melted towards our target right here. So after this first drop, price started consolidating right here, building higher on the 1 minute and 2 minute. It left a buy side liquidity pool that I will show you in a minute. Then it gave a sharp rate of this buy side liquidity pool, then gave this bearish reaction, this bearish 5-minute candle, which was also taking place during the London kill zone RT window from 3 a.m. to 4 a.m., where usually price leaves sharp structures and gives those moves filled with real momentum. That was also a very nice additional confluence factor that this whole thing was taking place right in the middle of the RT window. So now if we go to the 1 minute time frame, even though I entered based off that 5-minute candle, notice what we had here. If we would completely clean everything right here, notice that price left the slope, gave a bear sharp right here, running the sell side liquidity into bullish P array right here, and another sharp expansion to the upside. What it did again, it left this BPR here, another higher low. It consolidated, leaving buy side liquidity above. It ran sell side liquidity into this tiny BPR, and after that we expected for price to do another push to the upside, running these equal highs right here. Price did exactly that, running right back into the BPR on the 5-minute that I talked about, also in the consequent encroachment of the 15-minute bearish fair value gap, which was right there in the middle. I will show you in a minute as well. And price gave this reaction closing, that 5-minute bearish candle that I just talked about, which is where I took my short position, covering most of this area right here with my stop loss, and obviously targeting the sell side liquidity that we just talked about. So this level right here, let me highlight it for you. This level right here that price ran into was the 15-minute bearish fair value gap's consequent encroachment, the midpoint of this 15-minute bearish imbalance, this blue rectangle right here. So notice that on the 1 minute, the whole delivery was so clear and so clear. Price was building higher here. It ran these two equal highs and gave a sharp reaction to the downside, which is like, and there my entry was born. It messed around a little bit more inside of this DPR area, rejecting the bearish 15-minute fair value gap's consequent encroachment as well, and then took off to the downside towards our main targets. So overall, I think you can see that we had a pretty nice confluence area right here. If we are talking about an even higher, better and stronger type of an entry that didn't offer as good of a risk to reward as this one right here, but was not as high risk because we had a nice order flow right here on the 5-minute already at this point, was this fair value gap rejection that happened right here. Go this 5-minute bearish fair value gap. So price in this case, you can see that it left this high here, running some buy side liquidity. It dropped lower and it stopped very close from our target right here, making this low right here a fake low. When price comes very close to a specific liquidity pool and starts pushing away from it, this is when usually it just crawls back into opposing P array and then just crashes towards this main liquidity right here. So in this case right here, we have a fake low. We have a very clean bearish 5-minute fair value gap. Price ran into it, and an entry right here covering most of this area, targeting this sell side liquidity. This would have been a nice second entry right here. I personally didn't do any of that as I was already inside of this position. I didn't look to scale in. After this aggressive drop to the downside, after this aggressive candle close right here, I removed my risk, moving stop loss to break even. I didn't lock in any partials or just strictly focusing on this sell side liquidity people right here. So in this case, this position was just a fixed around 2.5-hour move right here. So that's all what comes to this position. I hope it was insightful. I hope you learned a thing or two, and we will talk very soon. Take care, guys. Have a great day.